Right, guys, it's 1st of February 2023. We're looking at the EU 1 hour chart. It is 9:22 a.m. PST. And on my screen here, we've got my buy side drawings on the 1 hour, and on the right hand side, I've got my sell side drawings. Same chart, exactly the same chart, just different drawings to help me understand what's going on. So where are we and what's happening here? Well, as far as I can see, we're caught between this buy primary and this sell primary. And because of that, we're able to play off of them. Now, I'm in a couple of, well, sorry, I've taken three trades today, and I'm currently in a short. I shorted somewhere at this top, and I'm looking for it to pull down into here. We'll get to those in a little bit, but suffice it to say, what am I thinking here? Here's the sell primary that formed. This is the last range that formed. So the last known primary that buy or sell on this higher time frame outlook. This is the last known one. So we got this. Let's find the liquidity range as well, which is right here. The liquidity pool actually was here. Stacking money on top up there. So why is this a liquidity pool? Range, initiation, break a structure. So that what does that do? If you were short in here, you might have put your stop at the top. And what it does is whenever we change in structure, break structure, we move stops. Now, the structure that they'd really want to be putting it in is somewhere down here. So they'll be looking to break this kind of structure in order to move stops. And so what happened here? They moved stops, right? We broke structure just slightly. People moved their stops. So if they were short up here, they hopefully moved their stops up here. So now we can go target those stops. And that's exactly what's happening. So they've targeted the liquidity. Whether or not we're going to just have a little pullback and a breakthrough, we don't know that. Nobody knows that except for BFI. We're not BFI. We can just trade off of what we see, not what they know. That if we had what they knew, would be millionaires, zillionaires, billionaires, trillionaires, literally just doing what they do, which is take the liquidity and hold. It's literally what they do. Take liquidity, enter their positions, hold, and move price from a different A to B. So that was our outlook. This was the liquidity range they took money from. It came up here, took it, initiated away, broke on itself, and then broke major structure. What that does is as soon as they break a major structure, it activates this. So this wasn't activated, in my opinion, until this point over here. So let's ray it out right to there. Now, as I analyze what happened between the B and the C leg, that's going to tell me where I need to start looking on the chart to see what kind of a reaction we could possibly have or where we could have the reaction from. Here's the A leg, here's the B leg, here's the C leg. As soon as we broke that A bottom from there, that C leg had fully formed, and so we look between B and C. I look to see where was the last known range, the last known obvious looking range that formed on the chart that's visible to me, that I can see this happening. And for me, the last known range was right here. Now I'm going to pull this away so we can see it better. But you can see that from this low, this wick low, all the way to this wick high, created a range. Now, again, don't forget, we don't activate until here. And by the time it's activated, we've had a bunch of shit happen in here. We've had, in fact, a new primary form. Now, what was the purpose of this primary? Well, we know now that it was for liquidity, because we can adjust that last known range up to this point. So what's happened is, yes, they've already taken from it, but they haven't taken from it during activation. And so I think that's kind of a key moment here. So we've had this range that's been pushed to this level here. Actually, it was pushed even higher, wasn't it? It was pushed to the high here also because of this range that had also dipped into it before. So this is the unmitigated part of the last known range after activation. If you catch me there and followed along, remember the activation doesn't occur until let's draw the line until here, until this blue line has been crossed. And so now this is playable. Now this range is playable. Now this range is playable too. This range was playable, yeah, same candle. So what was its purpose though? So we'd expect to have a reaction out of here for sure. We'd expect even potential continuation of lower prices. Depends how they want to play this. But they didn't. They used this as liquidity. It was a sell primary, but it was a sell primary that formed straight after a first one, and they do that sometimes to create liquidity. In this instance, it looks like they used it to create liquidity. So this has became a liquidity high, and they pushed price into this area. Now, a phenomenon you're gonna find if you do your own research enough, you'll find this happens a lot, is as you modify order blocks, for example, this order block had an origin of here, and it got modified to here due to this high pushing it out. What you'll find is a lot of the time, 50% is touched on the modification of the order block. So pay attention to that. Start looking into that if you don't already. If you don't know what I'm talking about, look at an order block that's been mitigated. Just find one, any one that has had a mitigation, and then modify it modify it to include the high. So in this instance, we're having to move it up to above this high, which leaves only this slither left of order block that has not been mitigated, has not been touched. And so look what happens. Comes up, boom, straight to the 50% of it, and then starts rejecting away. Again, I don't know how far we're going to reject. I don't know if this is going to be a deep mitigation and we're going to pull down and break structure down here. I don't know if we're just going to have this is it. This is the full move, and then we're going to initiate away. I do not know. Obviously, I do not know. But I'm in the market and I've positioned myself well, I believe. So let's go into my trades for today. There are three trades. Let's talk about them. One was a invalid trade, completely -1 R, and I want to talk about that one first because that is definitely something I can protect myself from. And then we're going to talk about the other two trades. Now, this is the first trade I took. We are now on a 15-second chart, probably the best one to stay on from all of this because we are there's just there's a lot to cover, and it's all sort of lower time frame. So this is where I'm back to the higher time frame now. I'm on the 1 hour again, real quickly. I just want to show you this range here. So this range here, like I said just a moment ago, this could have been the one that we played off of to get lower prices. And so I was definitely interested in this range. And so as I jump over now to my lower time frame, you can see that I've got this big gray box, which represents the exact same box that we just had on the chart on the higher time frame. And so I can see that price has come up right to the very top of it and is potentially holding, right? We can see it's come to a high here and it's sort of pushing away. And so when price does that, well, all I'm looking for now is a sell primary to form. And so what do we get? Range, initiation, break of structure. This is the range that comes in over the top of the liquidity, breaks on itself, and breaks major structure. Okay, so there's a valid sell primary that's formed. And so this is what kind of started me thinking, okay, sell primaries if are forming after a potential mitigation, higher time frame. So now let's look at what can I get in? And so this is the range that I was playing off of. So I kept watching what was happening. I'm really observing, exactly how price is sort of initiating into this area, and I'm thinking to myself, well, I'd like to see a lower time frame sell primary form here, 5 seconds maybe, and see what goes on. I kept it on the 15 seconds on my chart. I think I was switching between both, and then I see this primary form. They take the liquidity from above this range. Was it this range? big pardon, it was from above here. So they take the liquidity that was created from above a primary range, and this was the range that did it, that took that liquidity, and then they break on themselves and they break structure, major structure. So immediately I'm thinking to myself, okay, we've just done another liquidity grab. They've taken out this low one, but we've held within this high. So what I'm thinking is this is just this whole range here was just created for the purpose of liquidity. And so now that we've taken the liquidity, formed that sell primary, I want in. And so I see the initiation up, and as it initiates away, I enter because I just want to get involved, right? It's a primary, higher time frame mitigation. Then a sell primary has formed. We've just taken liquidity from that primary, broken ourselves, and bossed. And so I'm like, boom, I want in. So I click sell. I enter. Now immediately I get taken out, and almost immediately I realize why. I just sold into a buy primary. This is an invalid trade. So now let's look at my buy side drawings just to help us understand what I'm talking about. It was that break in structure, I believe, that caused me trouble. Range. Where did it come to? Did it break it? Was it here? You could say this was the range. There's lots of ranges. Range, initiation, break structure, stacks liquidity. This is the range that comes down, dips into the liquidity, breaks that structure like we saw, and then bounces straight back up. Now, it was that bounce straight back up which I should have really caught this in the moment and seen that, hey, a buy primary has just formed. So when a sell primary forms and then a buy primary immediately forms, that invalidates the sell primary immediately for obvious reasons. You're on the wrong side of the market, buddy boy. And so not a big deal. Got spanked, got schooled, whatever you want to call it. It's literally no big deal because it's a learning moment. And so let's look at my buy trade then now. So there's that failed sell here. Here's another sell, but this came after. So the next trade I took was this buy, and I thought this was a pretty decent buy. So over to the higher time frame again. Remember now we've broken through this box here, this range, and we've taken the liquidity from above here. So I was thinking to myself, okay, very, very cool. Now this is the range that I'm playing off of. So I copied and pasted it, and this is where that modified order block, right? Here's the modified order block. Now price came up, mitigated. Let's go over this. I was going to say go over to the sells, but we'll talk about what this was and what this was in a second. But suffice to say, we mitigated something and then created, right, we'll talk about this right now, actually, because this was a deep mitigation of a sell primary. Okay, so if we were to look left, in fact, let's just do it. I think I have to go to a 1 minute. Let's have a look. See, I've drawn the line. See where it doesn't touch any of these. We're drawing the line out to see where we actually land. And here's where we land. And yeah, we don't have enough time frame. Not enough candles on this one. So there we go. 30 seconds shows it. And so as you can see, this was the sell primary. So it was this range that came in, took all of this liquidity right here, took the liquidity, broke on itself, broke major structure. This is a sell primary. Now, the last known range that I can see is right here. This little guy right here. That's the last known range that I can see. And because of that, price came in. Oh, so I beg your pardon. At this point here, this is where price has chosen to stop. Right here, I would consider that a deep mitigation. If we were about to sell and it stopped there, I would expect an initiation away, a break of structure, all of the rest of it, because it's a deep mitigation. Now, coming back over, I wrote here deep mitigation of a sell primary, and so I expect that to hold. It's the one time where we can have a transitional order block hold for quite a while, right? So I'm expecting this to hold. Then, what do I see? Range, initiation, break of structure. What does that do? It stacks money. Then this happens. They take the money, they initiate away, break structure on themselves, and break major structure. Yeah, they're close, but it doesn't matter. Valid, valid order block. So I look on, here's the low, and I look on between the B and the C. Here's A, here's B, and here's C leg. And so between B and C, where's the last known range? Right down the bottom here. And so this is activated now. And so where's my limit order? Right here. So I just place a limit, get tagged in. It hangs around like a dirty smell for a while. Break structure up here. I go break even, and then I get taken when it returns back down. Big deal? Not at all. Did I sit on my hands the whole time and wait and look and wonder, oh, am I going to get the trade? No. I took a sell from up here because I saw what was happening. Now let's talk about the sell. Okay, so the buy, failed trade, break even, no big deal again. But let's check out the sell. Let's see what I'm talking about. So this was a sell primary mitigation. From up here, yes, we're in a great higher time frame location, and it was a sell primary mitigation. If we look left, we can see it actually mitigated a sell primary. However, it mitigated a weak area of that primary. So I'm not really interested in this holding. So I'm still thinking longs are in, but I have to play both sides. They're manipulators. I don't know if they're going to hold this, pull price way the fuck down here, maybe pull it down into a buy primary that's down here somewhere, and then initiate up. I don't know anything like that. I don't know when they're going to do, what they're going to do, anything. But what I do know is that that was a sell primary mitigation. That's literally all I needed to know, even though it was weak, right? In my opinion. And so I'm looking for reasons to sell. Remember, I'm in a buy. I'm in a buy. Where was it? Somewhere around here, right? I'm in my buy, and we're going long. And so I'm observing what happens here. Well, here's a range, initiation, break of structure, stacks money. This range comes in. Remember, there's 15 seconds, so I'm not super duper interested, but breaks on itself. And then I'm looking like, well, where's major structure? Is it here? Is it here? Well, realistically, major structure is down here. And it doesn't take that out. And so it's for that reason, I'm not playing this that hard. I'm looking at it going, this could be a mitigation. We could pull away. And so as I'm seeing things, what am I expecting from a pullback? Like I'm expecting a sharp pullback, a break of structure, something like that. Something, and notice how no structure was forming up here. So I'm not really fascinated too much about this range. I see price then come up above it, and that to me is more interesting because now I'm in deep mitigation territory, right? Boom, right here. And as I see price coming up. Now I'm not interested. I'm not interested here. I'm not interested here, 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 here. Now I'm interested. 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 Why? Because look what's here. This is the last known range. I'm not looking for a transitional order block. I don't want to mitigate something through here, through these fucking wicks. No, 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 no. I want to mitigate something substantial. And right at the top of that range was something substantial. So as I see, and I'm on 5 seconds, I'm sure at this point, as I see the mitigation occur, notice how price zips up strong and then holds. And it doesn't break structure. It doesn't want to break structure. It breaks the first candle on itself. Boom, I'm in. The moment it broke that first 15-second candle, I'm jumping in all over this one. Now, as I've pulled away, it's formed a primary, which is beautiful, right? Took liquidity from above this primary. This primary then broke on itself, broke major structure. You could say this is major structure as well. But yet we haven't had a retest since the breakdown here, right? So this is an unmitigated order block. So if price does make it back up here sooner than later, I believe we will have a reaction. Don't know how much of a reaction, but maybe it will be to react all the way, or maybe it will just be a short reaction before they push up. I don't know. But it's unmitigated. This is the last known range that I can see. So this is where I'd expect the mitigation to occur, or at least something to occur around this area. who knows? Either way, I'm in this for a 10 hour. For my analysis, I won't be changing my stop at all on this. My stop is break even, and I will not be changing my take profit either. I can't seem to grab. There it is. Why won't I be doing any of those things? Well, let's jump real quick. Jump to the 1 minute on both sides. Where's the last known buy primary? As far as I'm concerned, the last known buy primary is basically this down here. And where does my trade put me? Well, this doesn't even put me close to it. So it's absolutely no reason to change from my 10R. This is where I believe price will come to. We've seen so many times that price doesn't do what I think it's going to do, or do what you think it's going to do, or we think it's going to do, or whatever. So I'm not really interested in moving it. I just want to take a 10R on this one. Absolutely no need to go for 20R, 15R, whatever it is, or to move just down to here. Happy with my take profit placement on this one. So that's my 3 trades of the day. Not the worst trading I've ever done by any means. Let's see if this banks. You know what? Since we're so close to it, it's 9:43. We've got a big announcement at 11. I'm hopeful that we will just continue to push down here, and then by 11 o'clock, this will be the bouncing sort of area. We'll see what happens. But what I'm going to do for us right now is just pause this video, and we'll come back just to see the conclusion. The conclusion of this trade will either be here at break even or here at take profit, but we're going to come back and see regardless. All right, aloha. All right, guys, 10:55 a.m. We've got a big news announcement. Fed interest rate decision will make the markets spike in both directions and most likely take liquidity from both sides. That's happening in 4 minutes' time. So just to discuss my trade, 2 things have happened. I haven't taken both of these extra trades in here, but I did take one. I'm going to talk about it real quick while we got a few minutes. So here's the trade I was looking at originally, holding out for a 10R. We got to about 9R at the bottom, and then it started retracing. Unfortunate for me. And so I'm looking left as I see things bounce, and I'm wondering, why are we bouncing where we're bouncing? I don't see any primaries, right? And sure enough, I did actually have this tiny, tiny one drawn on from earlier, but I just didn't give it any weight. Range, initiation, break structure, and look at the liquidity grab. It's basically like a retail grab rather than anything significant. It's 15 seconds only, doesn't show on a 1 minute. And so I see price bouncing here. And so I put this tool on here, this purchase tool, because I saw buy long tool, I should say, because as I was analyzing what's going on, I did get to see that there is actually this buy primary that's being formed in and around this area. Boom, and I was able to spot a trade, right? So I put my tool here at the time of as it was bouncing. I didn't take it, okay, because I am biased short. But how often have you seen a range do this, right? Initiate high prices, come back to about the 50% mark, and then break off and up and away. So it's kind of like based on that logic, if I'm honest, just on the, hey, this is what we see a lot of the time. 50% gets a reaction, and this is 50% of the range or thereabouts, getting that sort of initiation long. So again, didn't take that trade. This is one I did take, 4.5R, and it was based on what was happening over here. Let's go to like 30 seconds chart. So we bounced from this very, what I'm going to call shitty, right? Very shitty buy primary, not really strong in my opinion, but it doesn't matter. It's bouncing from it anyway. Breaks all of this with relative ease. And so my thought was, we're going to need to spend a little bit of time through here to mitigate in and out, because these are transitionals, especially this one, since it didn't really, I mean, I guess it hovered there and it did mitigate in and out. But I was thinking both of them are going to need it. And then when I see this sort of touch up here, I'm thinking, okay, well, we could be just mitigating this block to pull back down lower prices, right? And eventually take out this low, which is why I'm still holding this trade. And so I see, just nothing really got me involved because it was so slow. There's just no good setup until you can literally just call this all of it range initiation, breaks on itself, breaks structure here, for example, and then they come up, take the liquidity, and then immediately run it down, right? Run price down. So as soon as I see that, I'm thinking to myself, well, any kind of break, 15-second candle break, I want in. Sure enough, I got my 15-second break right here, and I ran it down. Where do I run it down to? Well, I'm looking at, really, I was thinking here, but this is where I start to see price hold. So I did actually have a profit target below here at this point down here. And I just took it all in one go right here because I saw price was halting. Price was halting, and I knew the location. We were inside a buy primary, and price was halting and showing reasons why it might want to reject from here. And sure enough, look what's happening. We are bouncing higher. Okay, we've got 1 minute to go. Let's. I haven't got a clock I can bring up, but we're about to see. We're definitely about to see the conclusion. Oh, there we go. Boom. 11 o'clock, and my trade is definitely out. 100% taken for full 10-hour profit. So there it is on that one. Honestly, I expect us to react pretty fiercely here on both sides. So let's just have a little look. This is the kind of range I spoke about earlier, where I would expect price to sort of bounce from, or have at least mitigate from. The last known. So let's see what goes on. And sure enough, reacted from here just like we thought. And will it take the liquidity from above here, or is it going to take the liquidity from below here? This is now down to the BFI, the big mysterious BFI. What the fuck do they want to do? Who cares? We just follow what we see. We'll just stay live here for a few seconds more. Looks like they're going to now come up. But hey, when things look the scariest, that's a good time to sell. When they look the worst, like look, it looks like a buy right now, right? A big wick candle. This is the time to sell. So if I was still in this trade, which I'm not, thankfully, I would have got taken. But yeah, good trade for me. Happy with it, and all is well. All right, I'm going to conclude this video here. Hope you guys are having a great day. Aloha to anyone watching, and wish you all the most success in the world. Catch you on the next one.